Hello everybody, I'm Ken Fraser from the Economic Development team at South Gippsland Shire Council. It's an absolute pleasure to welcome everyone here today, and Council takes great pleasure in sponsoring the Dairy Expo and this event in particular, which we've been doing for many years now. And we really thank the participants and for everyone watching in. It's a great event, and we're really aware of how important the dairy industry is to South Gippsland. It's our key industry, and so we're really happy that everyone can join us here today. Our topic today is dairy snakes and ladders. Is it all a gamble? And we've got our fantastic presenter, Matt Harms, and I'd like to just roll the dice now and hand over to Matt.
Thanks, Ken. And thanks for the South Gippsland Shire for sponsoring the event. Great to have you on board again. I'd like to start by introducing the panel members. Philip Old, dairy farm owner at Lock and former investor in Nyora Estate Trust. Paul and Louise Shearer, share farmers at Lock with Philip and former investors in Nyora Estate Trust. And Evan Campbell, a manager and major partner in Red End Partners at Yanathan. It is an online platform because of COVID-19 lockdown restrictions. It hasn't stopped the show going ahead, and today we're talking about gambling, as Ken said. And these guys are all at the virtual casino. So over a number of years, there's been considerable interest in investment in dairy farms, from either existing operators wanting to replicate the work that they do on the home place, or by investors seeking a good return through operational returns, growth in livestock, as well as capital growth in land. The industry offers periods of strong growth and returns, but volatility and in extreme cases, negative returns on asset. Doing a strong, consistent job on the primary place of farming doesn't necessarily mean a second or third farm will result in equally strong returns. However, there are many examples where this is the case, and financial and personal rewards can be strong. Today we hear from a group of people who have done just this. They've made a decision to invest in the industry on a second farm, or in the case of Evan, leave a strong, lucrative international career and invest funds in dairying, as well as running a dairy farm business. We'll hear what works and what returns can be generated, what the pitfalls can be, and how important the roles and responsibilities are, and what business structures can be implemented to make it all work as smoothly as possible. It is also worth mentioning that all participants have been focus farmers in the past or present. The Shearer Old Farm was back around 6 to 8 years ago, and Red End is just in the final stages of this current round. On both these focus farms, investment and next steps for the participants were central to goals and direction of the businesses, and they were established under the Focus Farm program. So we'll learn now what some of the experiences have been of these participants. So, Paul and Louise, we'll start with you guys. What were you doing, what were you looking at doing when you were focus farmers? In terms of where were you at in your career and where were you wanting to take your career?
Yeah, prior to becoming a focus farm, myself, I'd been in the dairy industry virtually all my life. I'd been in and out a couple of times, and prior to moving to this farm here at Lock, we decided that we wanted to get back into the industry in the form of herd ownership. So we leased a farm and bought a herd of cows, and then 2 years into that arrangement, we moved across to this farm here at Lock. And we basically were just, dairy farming as normal, as usual. And then the opportunity came up to be involved in the focus farm, and being share farmers, there might have been one previous share farmer that had been a focus farm, I'm not sure, but we were asked to participate as a share farmer in the focus farm. So yeah.
And can I just ask there, what were some of those decisions or thoughts, I suppose, you were looking at that time around investment and cow numbers and growth? Because obviously you'd gone from a situation of leasing and then you'd gone and what some people would fairly say or unfairly say, taken a step backwards into a share agreement at Lock there with Philip. And so what were some of those thinkings that you had around stock numbers and what investment options you had?
Yeah, well, to us, when we went from leasing to share farming, it did initially feel like a bit of a step backwards, but we were able to negotiate to a higher share on this farm. Philip originally was after a 50-50 share farmer to come on here, and we originally turned that offer down because we didn't feel it was what we wanted. And then we negotiated, did a bit more talking, and we came on as a 60-40 share farmer, where we owned all of the cows and provided all of the labour, and any turnout that was required, we provided the turnout. So we went in as 60-40. So yeah, it didn't feel as big a step backwards. It didn't actually feel like a step backwards to go onto that arrangement. And I suppose for the first year or two that we were here, we weren't really in a growth phase, or we may have been without knowing, because we were always keeping every heifer calf that was born, even the calves out of the 2-year-old heifers, we keep them. We would rear every heifer calf. And it fairly quickly got us into a position where we had to think about doing something because we had too many cattle for this farm. So when we became involved in the Focus Farm, that idea was put to our support group that we replicate and go to a second farm with the sheer number of cattle that we had coming through the system, because we'd taken on various turnout blocks around the district to support all those cattle. And to us, it was sort of quite easy to build cattle numbers. Like I'm a cow man. I'm not a machinery man. I'm a cow man. And to me, a heifer calf is a potential milking cow. So yeah, for us, growing numbers was quite easy, and we quickly got to a point where we had to do something. So our support group, there were quite a few there that weren't supportive of a second farm. They were of the mind they'd just cash them in, sell them. But it was something we'd actually dabbled in it in the past. The 12 months prior to moving here to Lock, we were running 2 farms. Different circumstances, but we did run 2 farms for 12 months. So we had done it before, and we kind of knew what we were up for. So yeah.
Thanks, and we'll I might pick your brains again shortly about sort of what some of those returns, or what you embarked on once you took on a second farm, and what that looked like. But perhaps equally, you know, what options you looked at and what options you considered. Evan, I'll just ask you if you could just give us a little bit of work history on yourself before you jumped into Red Ann partnership, but also, you know, what some of the structure very briefly was in terms of how much you invested, and what some of those returns could have, you know, have looked like and could look like.
Sure. Yeah, thanks for having me. So I grew up on a dairy farm here in Yanathan, but didn't have much of an interest as a teenager. Went off and studied for 5 years and then worked over in Saudi Arabia in the oil and gas space for a while. Decided I'd had enough of that and came home, had a bit of a quarter-life crisis, I suppose you could say. Didn't know where I was going to go to next, and there was an opportunity to come and work on the home farm for 6 months. So I did that. That ended up becoming 2 years. Decided I kind of liked it. But I was actually working for my parents' long-term employees and share farmers. So there was an appetite for me to grow in responsibility, but there wasn't a natural place for me to grow into without upsetting the apple cart, as you'd say. Then there was an opportunity that came up, a farm across the road for lease. And myself and my parents' share farmers we were all rearing some young stocks, so we had some maiden heifers coming of age, and we had nowhere for them to go. So it was just an opportunity that presented itself. So we decided to throw our hat in the ring, and my parents, myself, and the share farmers, Dean and Beck, we decided to form an equity partnership that would lease that farm. And the farm was just across the road from the home farm. And that enabled us to utilise a lot of the same equipment, tractors and mowers, so without having to totally duplicate that sort of capital investment. So that mum and dad contributed that, and the rest of it, and then the rest of the contribution was just finding cattle to make up the numbers.
So your role was to provide equity, I suppose, in the form of cows to make up cow numbers. And I'll just step in and say that you were going to be managing the farm, so you were receiving a wage for doing that, because if it wasn't you running the farm, it would be someone else running that farm business, and a wage would have to be paid. So you're receiving a commercial wage for running the farm, but you also made a decision to invest equity into that business. Can you just give us a ballpark, if you don't want to tell us exactly, but what that startup equity sort of looked like from your perspective?
Yeah, so I had about 35, 40 heifers that I'd been rearing. So there was obviously an ongoing cost to maintain them up to the point of calving. And then I think we, as a collective, we bought a herd. I probably bought about 40 of those cows. So I think in total, it was around that $85,000 to $90,000 of equity that I'd sunk in personally. And that was about 15 to 17% of the herd numbers. So I think, we had about 330 or 40 cows in the first season, of which, 50 or 60 were mine. Yeah.
That's great. Yep. All right. Philip, we'll hear from you. And you were an outsider to the industry, so unlike the others that have sort of grown up with it, you're an outside person coming in, had been an investor or an owner of other businesses with strong performance. Why did you choose to invest in the dairy at Lock some 12 or so years ago, and then more recently at Nyora, in joint ownership with Paul and Louise? Can you give us a little bit of your background there?
Yeah, thanks, Matt. I had a business which was started by my parents. It was a fertiliser business. We used to clean out poultry sheds and sell it as fertiliser. And I'd worked in that ever since I left school. And after about 40 years, I decided that I would like to do something different for a while. And so about 5 or 6 years before I actually sold the business, I bought part of the original farm here at Lock. And the part that I bought was part of the dairy farm that was still running as a dairy farm. And the opportunity was there to lease it back to the person at that stage that was running it as the dairy farm. And so I did that. And then a couple of years after that, the opportunity came up to actually buy the next part of the farm, which had the dairy on it. And I'd never sort of aspired to be a dairy farmer. That was something that never really entered my mind. I mean, Dad always said people milk cows were crazy. So that, but the opportunity was there, and from dealings with people and dairy farmers, it seemed that they did have a opportunity to reduce debt, and I saw that they were buying land and doing things. So it seemed like that it was a profitable exercise in the hands of the right people, running it properly, that they did do well out of it. So I bought that second part of the farm, and that's when the relationship with Paul and Louise started. Been very successful. And then back in, I think it was 2016, they came to me and said about the second farm at Nyora, would I be interested in going in with them in that? That's how that started.
Good, thanks. So certainly not a lifelong ambition, but you'd seen good operators appear to do well out of the industry, and there must have been something in it that stirred perhaps a little bit of passion or something to invest in the industry, which has been great. And we'll perhaps tease that out a little bit again shortly. So you mentioned there, and Paul and Louise mentioned a second farm at Nyora. There was another step in the middle there, Paul and Louise, wasn't there, in the sense that you had this surplus stock that had been generated from the Lock share farm arrangement with Phillip. You had to do something with it, and I know some of those, and people may be listening in, that were involved in those discussions. There was everything from cash the surplus cows in to then go and buy investment properties or a turnout block, a home for yourselves, whatever. Now, you obviously chose not to do that. You didn't cash them in. What did you do with them in between going to Phillip and co-investing?
Yeah, so for 3 years prior to that, Louise and I leased a second farm at Coonawarra. And yeah, again, in discussions with our support group, because we began that lease arrangement while we were still a focus farm. And yeah, as I said earlier, some were against that decision, some were for it. We did thrash about other ideas of other forms of investment. We had investment houses in the past, and we did okay out of them. They actually allowed us to begin and buy the herd, but you know, we'd had pitfalls with those properties and tenants and that sort of thing. So that sort of wasn't an avenue we were keen to go down again. And to me, and it still rings to me now, one of our open days while we were a focus farm, someone that was there said, stick with what you know. You're good at what you do, stick with what you know. And that was sort of where I was at too. You know, I know how to farm, I've done it all my life. And as I said, we had ran a second farm for 12 months prior to this one. So yeah, we decided to stick with what we knew. So, and at the time, cattle weren't expensive, so they weren't worth a lot for us to sell. And we actually had to buy 70 to make the herd big enough and viable enough to lease that Coonawarra farm. And we bought them at good money. So, yeah, so we leased that farm at Coonawarra for 3 years and did very well out of that. And that contributed toward us being able to purchase the farm at Nyora with Phillip.
So we'll go on to that, because I mean, I don't think it would be fair in a public forum to sort of ask what sort of return you got out of Coonawarra Farm. But essentially, I think you've said it well enough that you did well out of it. It was a good step. It allowed you to maintain, or to hold those cow numbers at a time when they weren't worth a lot, but also to grow cow numbers even further, and put you in this position with a farm that at Nyora that came up. And can you just give us a little bit of an overview there about what the structure was of that business? It's easy to say, you know, you co-invested with Phillip, but Louise, do you want to give a little bit of an oversight there in terms of what the structure in a nutshell was there with Phillip?
Yeah, so pretty much we made a unit trust. So we had a couple of businesses that owned the land and owned the business, and so Paul and I owned 50% of the shares in the unit trust at Nyora Estate, and Phillip owned the other 50% of the shares. So we were going in as equal equity partners into the business at Nyora. And in terms of the running of the business, we had a manager running the business and support staff for him, and we all had our own responsibilities and knew what we were doing. So Paul, being the cowman, he looked after the cows, the feed. Phillip looked after all the infrastructure, and I looked after staffing and bookwork. And we had a drawn up agreement that stated everything in the agreement as to what would happen in various circumstances, that if anything happened between Philip and Paul and I, or individuals, what would happen in the future, so everyone was on a clear page.
So there was quite strong underlying structure, not only just in terms of how it was purchased and you know, cows and plant and equipment perhaps separate to land, but you were equal owners in the business, but you actually had these defined roles and responsibilities, and also exit clauses, if you like, around, you know, and I presume in that, you know, illness, death or disability, or equally if someone wanted out, if it wasn't working, because you know, we'll touch shortly on perhaps how it did operate financially, because you mentioned a pretty key date, Paul, I think when you were talking, 2016, and a lot of people will remember 2016 for all the reasons that probably gave you a lot of grief, which was the milk price drop in the April. And from memory, I think you took over in the March at Nyora. So, yeah, we've got some challenges suddenly in place with equity, well, investors making a decision to go into something at a time in the industry that was chaotic. So we'll tease that out in a tick. Evan, I just want to jump back to you, because we did jump over, and I don't want to go too much into the Red Ann structure because it's quite complex in terms of how that operates. But you started there with an investment of about 85,000 or so in cows. That was 3 to 4 years ago. How has that changed now? Has it changed along the way? And how's that investment looking?
So when we originally set it up, the idea was that myself and Dean and Beck, the share farmers, would eventually grow our cow numbers, and my parents would not replace their animals as they left the herd, so that there would be a transition and perhaps a growth in the overall numbers that we were milking. So yeah, and that has happened. Myself and the share farmers each year, I think I was a 12% partner in the first year, 15% the following year, 18% last year. And there's been a likewise increase with Dean and Beck's cow numbers, and a slight decrease in mum and dad's cow numbers, but the overall herd number has grown. We've gone from 330 to 390 last year, and possibly 420 this year in the final year of the lease. So yeah, that has grown accordingly. The amount of equity invested has grown.
So the business itself's grown. You've grown into the farm, if you like, and built up stock numbers. And then the proportion of each partner has been able to change as well. So not only have you grown in terms of stock numbers in total, there's been a rejigging of partnership levels, I presume, which I'll get you to perhaps explain in a tick. And operationally, do you get a return out of it, or has it all been essentially used to run the business?
So the way that it works is that the business runs like any other lease farm, and the idea is that at the end of the financial year we draw a line in the sand, and if the business has made money, if we have surplus money, that's recorded, and as cash flow allows, that dividend is paid out. Good record keeping is essential because the percentage ownership of the partners changes every year. You can't sort of just carry money over and you need to know, oh, well, in that year we had a good year, this person's owed that much money, etc., etc. So that's been one of the challenges. But yeah, so in the first year we more or less, there was a slight surplus, but that didn't take into account heifer rearing costs. Like this business that I'm managing day to day is just a milking platform. So all of the partners have heifer rearing costs or lease land costs, those sort of things in the background, AI costs. So whilst the business was able to make a dividend in the first year, it didn't cover the costs. of what was happening in the background, especially because Dean and I were growing more animals. Like if I was a 10% partner, I didn't have 10% of the replacements coming through. I might have had 20%. My costs, and Dean and Beck's costs were actually learning they were larger than what the business was sustaining, at least in the first year or two. Yeah.
So you need to have essentially a source of off-farm income, or a source of income, let's say, and I think Paul and Louise and Philip have been in the same boat, that you need this other business at different times or other source of income to actually cover the deficits of the business, this second farm or this business decision that you've gone into. So in your case, Evan, it was your return that you're earning out of the cows that you had initially didn't cover the costs of what the rearing costs were of your replacements coming through. So there's you could argue a negative cash return for the first few years that then was swung around into positive territory as your equity grew and your equity stake in the business grew and your stock numbers grow. So can you give us once again, just a little bit of an insight, if you don't want to give us the actual number, but what sort of money you think you may have pulled out of or grown, what sort of wealth you might have grown from the business in the last few years?
I was just crunching some numbers last night. So I think including young stock and mature cows, I had roughly 136 animals in the first year. And now I'm up to about at least 210. So I think in terms of equity invested, I probably had about 150,000 worth of animals in the first year. That'll be in the vicinity of 350 this time around. So yeah, in terms of cash in the bank, it's probably covering my expenses. Whatever dividend I get at the end of the year makes up for the outgoing costs that I've had during the year. So yeah, cash wise, it's been stressful at times, but yeah, if you keep your eye on the equity growth with the growth of cattle numbers, that's where it's at, I think. Yeah, so it's probably been in the 2.5, 3 years in the vicinity of $200,000 probably. Yeah, something like that.
Which is pretty amazing return on investment. Philip, this all sounds pretty good, and to an outsider or an investor in Melbourne or whatever, as we've been sitting here, an alert's come through on my phone to say the share market's just dropped to something like 3% in the first hour of trade. This all sounds pretty good as an investment, as opposed to this volatile share market thing. Is it as good as what it sounds?
It's a good question, Matt. I mean, we had the farm for a relatively short time, so we had it for 4 years. And if we probably could have picked 4 years to have it in, we couldn't have picked the worst 4 years to have it in that it crashed straight after we bought the farm. We had a very difficult season in there as well. So yeah, it was a very difficult time to have the farm. But ultimately, when the decision was made to sell the farm, it wasn't really the financial part of it that was the decision. It was my decision that I wasn't comfortable with the workload that was involved with it, and I wasn't comfortable with what it was doing to the farm here at Lock, in that I didn't have the time to put into the farm here at Lock that I wanted to, and I couldn't see myself doing both farms for the next 5 or 10 years. I didn't think I was capable of it. So I made that decision that I told Paul and Louise that I wasn't going to carry on with it. And then we had discussions about what would happen as a consequence of that.
So, I mean, yeah, so you've exited out of it, and it has recently settled, just only in the last couple of months. And as you said, Philip, I think you said quite rightly, there's a pretty volatile period. Like the last 12 months has been pretty good, but the 3 years or so before it were fairly volatile in milk price seasons. And you took on a farm that was pretty good. It was not certainly not a rundown farm. But Paul and Louise were there, and Philip or Paul and Louise, but I'll perhaps direct this question to Paul and Louise. Was it as good as what you thought it was initially, or were there some surprises there that you didn't know were going to be there?
With the farm, is that what you mean?
Yeah.
There were plenty of surprises, but not surprises as such, but plenty of issues arose. The first year we were there, and we actually, the herd calved at the wrong time, because we took the herd we had at Coonawarra, which was a May-June calving herd, and going back to when we decided to take on Coonawarra, Coonawarra was taken on because it was a farm that would support all winter calving cows, and we took those calving cows out of the Lock herd to ease the pressure here at Lock. So, and it worked very well at Coonawarra to calving in May, June, but when we bought Nyora, we had already joined the cows for the next calving, not knowing that we were going to go out and buy a farm at joining time. And then when we did and we bought the Nyora farm, it was, well, these cows are calving at totally the wrong time of the year. So but we had no choice. So we moved in there, we calved them down, hit a very wet winter, and we had to spend $100,000 on laneways the next year because the laneways just went to crap. And as probably what happens with everyone when they buy a new property, anything that could go wrong went wrong. Any motor that could blow up blew up. Everything happened. So it was just a constant replacement of things that needed to be replaced. We did find, in comparison to the farm here at Lock, it seemed a hard farm to run and manage. So there were quite a few issues arising over there that, you know, on a regular basis, some of them that you think, well, you know, we don't have those problems at Lock, and yeah, in comparison, Lock seems like an easy farm to manage to what that one was. And it was a bigger farm too. It was slightly bigger than Lock, but it was bigger than the previous lease farm that Louise and I had. And it might be worth noting that the manager we had on our Coonawarra farm moved across to Nyora to manage that farm for us. So we went from having a 200, I think we milked 240 at Coonawarra in the last year, basically a farm that 1.5 people could manage, Stephen and his wife, and a bit of help from his kids, but his kids were younger back then, to Nyora, where we needed the manager plus employee. And that was probably the hardest part of the whole show, was finding and retaining a good employee to help the manager at Nyora, and that contributed to why it was a harder farm to run and manage as well.
So it's had, and just to set the scene a little bit for those that don't know, because you've certainly mentioned a few locations that, you know, locals will know that others may be watching this from around the country. Geographically, how far are we talking to initially sort of Lock to Coonawarra? So time-wise, driving.
Half an hour drive.
How long? Sorry.
Half an hour drive. Half an hour.
And then, and Lock to Nyora?
10 minutes.
Yeah. So we're talking significant difference in terms of, travel time. Did that make, I mean, is that a requirement in your mind around, if we're talking multiple farms? Evan mentioned just before that, you know, the home farm for them is around the corner and there's sharing of equipment. How did it work with Nyora and Coonawarra in terms of that, just that geography and the movement of yourselves, but also equipment?
Yeah, it depends which way you want to look at it, because half an hour, it was a 25-minute drive to Coonawarra, and I regularly did that drive, but not every day, and by the end of it, I was glad to see the end of having to commute 25 minutes to and then try and get back on some occasions, get back to get work and get milk and whatever here. But in comparison to only 10 minutes across to Nyora, see, Coomera we were leasing, so leasing versus ownership. Ownership, you sort of move more to wanting to be there, wanting to go there, or sometimes having to go there to fix issues that have arisen. Whereas a lease farm, motor blows up, you ring the owner and let them deal with replacing it. So it sort of has its good and it has its bad, because half an hour away sometimes is good because, well, I'm half an hour away, I can't come over to help you, or haven't got time to get there today, so we have to work out some other arrangement. Whereas 10 minutes, you sort of sometimes, you think, oh, and if the manager's rang you and they've got a problem, you're like, right, I'll be there in 10 minutes. And sometimes you don't want to be there in 10 minutes and you mightn't have that 10 minutes either. So yeah, it did become easier initially, only being 10 minutes away. It was off our shoulders. But yeah, there were times where you sort of, in a way, wish it was a bit further away so that you didn't feel the need to have to go there on time at times.
Evan, I just want to, because as I said before, you're around the corner from the home farm, and you mentioned it, but I just want to reiterate it here. You're in an equity partnership here with your parents, but also the share farmers from the parents' farm. So you've got multiple people with, potentially different motivations or goals, even, and different levels of equity being injected into the business. Paul and Louise mentioned roles and responsibilities. Has that been a challenge around sort of making sure everyone's heading in the same page, or is there conflict? Has there been conflict?
Touch wood, it's been pretty good, because the share farmers had that long 15, 20-year relationship with my parents, and I've known them for just as long. We had a very common approach to farming, like the same sort of philosophy and way of doing things. So in terms of managing the farm, how we deal with cattle, approaches to cropping and that sort of thing, like that was all pretty seamless. There was a difference in terms of I had some savings from my time over in Saudi Arabia, so the financial pressure on me to contribute those cows, like I was able to sort of carry a bit more of a cost. Then back through the time with the Focus Farm, I'm sure they'd be happy with us speaking about this. Like they had to go into some debt with the bank to buy their cows. So every month they've got interest outgoing. So I know that from a financial point of view, it was much more of a stress on them. And mum and dad had the home farm and security of that, so they were probably in a similar position to me. But yeah, definitely, everyone needs to be on the same page in terms of cash flow and financing, and communication's the key. Like we were, especially in the first 6 months, we're having monthly meetings. What's happening on the farm, what's happening behind the scenes, how's cash flow, those sort of things. But yeah, and there's also a clear expectation that apart from managing the farm day to day, I'd be looking after all the bookwork and making sure that all of our staff members, like rostering, that sort of thing. But if I needed help with some animals, like some lame cows, difficult calvings, Dean and my dad are just a phone call away. So yeah, and especially in the first sort of 6 months, they were helping out a fair bit. Come over and jump on a mower for a couple of hours, that sort of thing.
So once again, geography is pretty important, but I think the things that's standing out in what everyone's saying here is everyone was on the same page. Everyone sort of knows, almost has a common goal, and equally there's the ability to exit or there's an exit strategy worked out, I suppose, too. Philip, I want to just ask you, because equally, I've had people say to me in regards to, you know, when they're running multiple farms, you just have to accept that it will only ever be done 80% to the standard you want it done. Does that ring true with you, or do you think it can be done more than 80%? Or do you have to accept that, you know, 80% is as good as it's going to get?
But I certainly think you can aspire for more than 80%, Matt. There are times, I guess, at Nyora where we spent money on things and it was a question whether we really needed to do it that well. I sort of come from a point of view that if you want to attract good people, and it's very hard to attract good people anyway, but unless you have good facilities and things are up to scratch, you're not really going to be able to attract and keep those people. I mean, one of the things that attracted us to the farm in the first place was the dairy and the house. They were all relatively modern, and they were very good facilities. So, and I think if you want to expect good results, you have to give people something good to work with. You can't expect to get crackerjack results from a farm that's only 60% looked after. That's the way I look at it.
And is that sort of your philosophy in your previous businesses as well? Is that just the way you operate, or is this sort of the dairy farmer, Philip, coming through here? Is it?
No, that's always been my philosophy, Matt. It's the same with you've got vehicles or whatever you do. If you have good equipment and good gear, well, you've got more of a chance of attracting and keeping good people. Labour is, I think, the critical component in any business. One of the most important things, and unless you can attract and keep a reliable workforce, you're really going to struggle. So if you've got good facilities, it goes a long way. And good management and communication with management, that goes a long way to a successful business.
Right. Just in our final few minutes or so that we've got left, Evan, I wonder, and maybe Philip as well, but Evan's probably more recently, how does it compare to salaried income, if you like, and I'm, you know, getting you to put your dairy farmer hat on, I suppose, rather than your manager of Red Ann hat on, where you are on a salaried income. But, you know, you made a decision to step away from a career outside of dairy and come onto the home farm. How does it compare? I mean, we always hear about the conditions are tough and you know, there's no annual leave and no sick leave and things like that. How does it stack up in comparison?
I think the first 2 years that I came home, I was just working as a trainee farmhand, really, despite the fact that I'd grown up on the farm. And yeah, the wages for that isn't great. Definitely not compared to the oil and gas industry. But I don't know. I think my time in the oil and gas industry allowed me to have some perspective. The money was okay, but that was a very stressful job as well. At least, dairy farming is pretty stressful as well, but it's pretty rewarding. And it's your own business. So what you put into it, generally speaking, you get back. So I think that's probably the key difference. Rather than busting your backside for a multinational company, you're sort of doing it for yourself. And I think there's a connection to the land too, like continuously improve. Yeah, that's what motivates me. Yeah.
Good. And Paul and Louise, I just want to ask you, because I think it would be easy to say, or easy for listeners to get the impression that you're in Nyora and it wasn't all good and you didn't come out in front. Once again, if you don't want to disclose any numbers, please don't. But was it actually worthwhile investment?
Answer that.
Well, Matt, we had 3 really bad years of, obviously, as you know, 2016 was a horrendously bad year. But we purchased a farm the milk price dropped. The season was bad. So there was the compounding factor of badness there. And for the following 3 years, we were playing catch up. And it wasn't until this last year of our farming venture there that we actually probably caught up and made a good profit out of it and saw the rainbow at the end. And I think if we had have sold that farm when it first went on the market, we would have come out pretty far behind because we'd still been playing catch up. But this last year, being a good year, we've came out probably about even. Once we've had the sale costs and all that sort of stuff, about even, maybe a little bit more than even. But yeah, that's what we've had. But that's contributed to some bad years.
Yeah. So it was timing, and possibly a lack of time to recoup those losses. So I mean, I don't think we can underestimate how bad that 2016-17 period was for the industry, but equally for you guys with stretched resources. New farm, finding your way, and the financial, which the issues that Evan's raised, having that need to have that outside, funding really to keep afloat, what damage that can do, over a short period of time. But you've had that chance to recoup that, which is good to hear. And I suppose what it says is that there are short-term gains at different times, like what Evan's highlighted, but equally there can be short-term, pretty severe losses that can, last well beyond a year. In your case, it sort of took 3 years to get it back. Well, really, it took the 4 years to get it back.
Because it might be worth noting, Matt, that second farm of ours was its own independent business. It wasn't propped up at all from the Lock Farm or any other out.
If we were relying on the Nyora farm solely for our income, we'd be living in a ditch somewhere, probably.
Yep. So you're essentially, it was a self-funded operation that had to perform, and it didn't financially perform until really the end of the fourth year. Well, till the fourth year, and by the end of the fourth year, you'd caught back up.
So it took 1 year to catch up 3 years worth.
Yeah.
That's right, which shows you how good the industry can be in terms of how those returns can be strong.
Very good year last year.
Yep. So it really is a gamble. Absolutely. So just to really start to wrap up, are there any major stresses or absolutes, either positives or negatives, or any stresses? And I'll ask the three parties individually, the four of you, but the three parties individually, that you want to highlight. If you were saying this to someone, if someone said to you, should I do it? What would be the criticals, in your opinion, that you would do? So perhaps, Paul and Louise, we'll start with you guys. Are there any absolutes that you would say?
Well, you've got to have the right employees. You have to have the right employees that are on the right page, and you have to have good communication. Bad communication can ruin a lot of things. So that's probably the most important for me.
And I said earlier that we had a lot of trouble retaining staff, but our actual management, the manager of the farm, was very good, and we had that same manager for 7 years. So to find the right and a good manager is probably the most critical, and to have that open and good communication with them. And I think if I had my time of it all again, I think in farm, I think I would stay leasing a second farm versus owning a second farm. There just seemed to be less stress involved when we look back at the time we had Coonawarra versus the time we had Nyora. it just seemed easier on a lease farm. And we, admittedly, yeah, there was some bad years at Nyora, but there was a pretty shocking spring to finish at Coonawarra. So yeah, I think I would lease a second farm versus own a second farm.
Yep. Philip, I'll flip across to you. Are there any absolutes that you would say, or any words of advice if someone came to you and said, "Should we do it?"
Yeah, mate. I think first of all you've got to know your partners and make sure that your partners are on the same page as you. I mean, Paul Noyes and I were good and we communicated, so you've got to make sure that everybody, as far as outcomes, is on the same page and knows their responsibilities. I think you've got to pick a right farm, perhaps a farm that you can get away with running yourself. When you put labour on to another farm, it can be a different set on the same farm, can be a different set of circumstances. I mean, the farm at Nyora was a good farm. It was a very pretty farm. But compared, as Paul said, compared to here at Lock, it wasn't as easy to manage. There was a lot more upkeep on it from that point of view. So that needs to be something that's considered. I think you have to be financially viable so that if there are shocks, which the industry seems to be a bit prone to, that you can ride out those shocks so that you have the backing there behind you to do that. If you go in too thin and one of those shocks happens, you're really going to struggle to get through that. And as Louise said, I mean, you've got to make sure that you've got good labour and good management to run it, because if you haven't got that, it would be an absolute nightmare. If you're trying to run a second farm with labour that's not working, it would be a nightmare.
Terrific. Evan, you've got the final ability to wrap up here. Paul and Louise mentioned that the lease farm option is the better way to go, which is what you're on. Does all that ring true? Are there other aspects that you would say are critical to how this works?
Yeah, like being a lease farm here, like I suppose we've got a lot of communication with the farm owners, and we made an investment to build a calf shed. So I suppose you've got to look for win-wins. Like we were happy to stump up some additional money to make a long-term investment in this farm. So despite the fact that it's a lease farm, sort of touching on what Philip was saying, like good facilities. So look, if you find a farm that might have some downfalls, I think you've got to be open to the ideas, to think outside the box and maybe make those improvements, come to those arrangements with the farm owner. And apart from that, I would just say that, yeah, communication's key, the right staff, that your support network. So make sure you've got good employees, maybe some mentors, family and friends that you can call on for advice. And I'd encourage people to seek the resources that are out there now, whether that's being part of a focus farm or just continually learning. Like you've just got to be, keep your mind open and just, that's been one of the biggest things for me.
Thanks. And look, I will wrap it up there. Thanks all the participants for being so open, honest and frank with their histories and their pasts and the pros and the cons. I think, this session's always been renowned for being realistic. We don't gloss up something, but equally we try not to be overly pessimistic. And I think everyone's highlighted the industry is a good industry, it's a strong industry, but it's a volatile industry. And I think hopefully this session's brought out to those listening really just what does work, what doesn't work when you're stepping into this multiple farm or investment farm portfolio. And hopefully you might be able to get something out of it. So I do really want to thank the participants for their openness and honesty and contributions to this discussion. Thanks again to the South Gippsland Shire Council for sponsorship and for JD Events for all the background work that they do in pulling this together. So good luck everyone, and we'll finish up there.